of you may be new to our company, I would like to begin with a brief overview about the company and then move to our financial performances for the first quarter of the financial year. I would like to highlight some of the key operation developments during this quarter. Our total order book has reached an all-time high of INR 761 crores, providing strong revenue visibility for the coming quarters. During the quarter, we commenced execution of our largest ever order valued at 307 crores received from Hindustan Zinc in the state of Rajasthan. We also secured an extension of our coal-backed methane contract from Reliance Industries Limited valued at over INR 166 crores, further strengthening our long-term revenue visibility. Approximately 77% of our order book comprises private sector clients, reflecting the continued improvement in the quality of our order mix and supporting better cash flows and working capital efficiency. To support our growing business requirements, we have placed orders for additional drilling rigs and other equipment, further strengthening our execution capability. During the quarter, we were also empaneled by Oil India Limited for providing 2D and 3D seismic data acquisition services across Oil India Limited's onshore blocks, opening up new opportunities in the seismic exploration segment and further strengthening our presence in the oil and gas exploration space.
Let me first brief you on our financial performance for the quarter for the financial year 2027, followed by which I'll provide you some of the key operational highlights for this period under review as well. I'm pleased to share that Q1 FY27 was one of our best ever quarter. The operating revenue for the first quarter was INR 62 crores, representing 54% increase year on year. The EBITDA stood at INR 15 crores, an increase of 157% year on year, while the EBITDA margin was around 24.15%. The net profit after tax was INR 9.3 crores compared to INR 2.5 crores Q1 FY26, which is a remarkable 289% increase on a year-on-year basis. The strong financial performance for the quarter reflects our team's consistent execution, operational discipline, and continued focus on efficiency. As many of you may know, we were awarded a coal block in Jharkhand by the Ministry of Coal. We have successfully completed the exploration activities, and the definite geological report is currently under preparation for early submission. Subject to the necessary regulatory approvals, we will commence mine development activities, including preparation of the mining plan, with the objective of commencing coal production by the financial year 28-29. This project continues to be a key part of our long-term strategy of becoming a fully integrated exploration and mining company. On the international front, we continue to strengthen our presence in Oman through our strategic joint ventures. Our first joint venture with Alara Resources Limited continues to perform well, while our second joint venture, we have successfully completed the airborne survey across the awarded mining block, and the geological report is currently under preparation. Overall, backed by our record order book, healthy order inflows, strong execution momentum, and a robust project pipeline, we remain confident in our growth outlook. Historically, the second half has been our strongest period owing to favorable weather conditions and higher project activity, and we expect this trend to continue in future as well. The exploration and mining sector in India continues to present significant opportunities driven by increasing investments in critical minerals, infrastructure development, energy security, and mining reforms. During the quarter, the balance 75% consideration against warrant issued on preferential basis was also received, resulting in their conversion into equity shares and further strengthening our capital base. In addition, we are participating in the ongoing right issue of Alara Resources Limited Australia, reaffirming our long-term commitment to our international mining business.
What is the current order book value? Its composition by vertical and sector, private, government. Its expected execution timeline, resource utilization rate, and the overall outlook for the business pipeline and order book growth.
Oil and gas would be around 25% and the rest of it. There's core drilling of exploration going on now. The CBM again, Reliance is high value ordered. And the rest of it, seismic is there, then there is aquifer mapping. So I would say that everything is ranging from 15 to 25%. There is a contract which will go on for 4 years. There are 1 or 2 contracts that are basically for the next 2 years. Then there are contracts which are basically for 6 months. The good part is that there are few long-term contracts with us, that gives us stability. And the other contracts that will keep on varying, by participating in few tenders, upcoming tenders. So that will keep on switching from one to the other.
You talk about CBM, you talk about seismic, you talk about core drilling, mineral exploration, coal, non-coal, aquifer mapping from Central Groundwater Board. So all the things are doing well. We are receiving extensions of from the current contract, whatever the contract permits as far as clients are concerned. There are new tenders coming in from new clients as well as the existing clients for the same work, for repetitive orders. We are participating, as maximum as possible. Plus, there are new opportunities in underground coal gasification in the field of rare earth critical minerals. So, in all, currently the exploration phase looks very well, and it should go on for next 3 to 5 years. 761 crores, and it should go up and up. So, at any given time, we have a good visibility of 3 to 5 years for Southwest Pinnacle. So it is not easy for us to give you mineral by mineral allocation of work we have. So, at best we can tell that almost out of all the contracts we have, almost 70 to 75% belongs to the private sector and 25 to 30% comes from the government sector. So it is difficult for us to give exactly what is coming out of coal right now because it keeps on changing from time to time, quarter to quarter.
But one thing to add on to this is that whether we are doing coal exploration or mineral exploration, the resources, the manpower, they remain the same. So once the project is over, it can go for, maybe the machines can go for mineral exploration or again for coal exploration.
The reason is that we have outsourced some of our work to other contractors as well. So the resource utilization has been more than 100%.
And we have hired a few rigs also, where our manpower is working. So, and some of the resources are, in the pipeline. We have raised purchase orders for for a few more additional rigs and resources.
Can you provide a comprehensive update on the Oman joint ventures, including their operational status, revenue contribution, actual cash accrual, the strategic rationale, and investment in Alara resources, the expected revenue timeline, and how the geopolitical situation in Oman is affecting operations?
The first is a services joint venture, whereby we, along with an Australian company called Alara Resources, are providing mining services and drilling services contract to Omani companies. So revenue has started coming in for last 2 years. So this year also, since we own 35% of the total joint venture, we don't follow a line-by-line revenue system. Yeah, it is just added in the profit and loss. But yeah, as you said, it's a $125 million 10-year contract. It is running well right now. In the last quarter itself, the total profit from this joint venture was around 3.5 to 4 crores, in which our share was 35%. So it is continuing well. In addition to the mining services contract we also have 4 operating drilling rigs in Oman, and we are booked for next 2 to 3 years as far as the drilling services is concerned. So both the services domain are doing well right now in Oman. The second joint venture in Oman we have is a mining services, is an exploration block which we own along with an Australian company and Omani companies. So the exploration has already started. It's almost a year and a half since we acquired this block. It is going on well. The airborne survey has been completed, and once that has been done, we shall start ground geophysics, and then we should start preparing the geological report of this block. It is spread across more than 1,400 square kilometers. Oman is, it is outside the, I won't say outside the Strait of Hormuz, but it is on the outskirt of the Strait of Hormuz. So the shipments have affected, but it has not affected that much that it's a matter of concern. The mining services contract which we are running is going on well right now, and So the company as such, our principals in Oman, they are doing well. They are shipping well. So it has not affected Oman, as far as the Middle East tensions are concerned. So we are in a pretty safe zone right now. And as far as contribution to right issue of Alara Resources is concerned, the decision is quite strategic in nature for Southwest Pinnacle, because in all our joint ventures in Oman, Alara Resources is our partners, and the mines where we are performing the mining services contract is also owned by Alara Resources. So it's more of a strategic decision which we have taken is to participate in the direct equity participation in the company based out of Australia, which is the mother company of the companies in Oman. See, in the first phase, we invested about 500,000 AUD. So we can invest anywhere up to 1 million in the second phase in this right issue. So it all depends, apart from the entitlement we have as an equity shareholder, how much shortfall we can subscribe. It's a listed entity in Australia where I'm also the director in the company because of the personal stake as member of the board in Alara we hold. So currently Southwest Pinnacle directly holds about 1.25% in Alara in Australia. But through this opportunity, Southwest Pinnacle has a chance to increase its holding in Alara Resources Australia. But in addition to what Southwest Pinnacle holds in Australia, Southwest Pinnacle also holds direct, much larger equity in Oman in direct joint ventures.
It was somewhere 1.5 crores, but this year the profits are much higher, which is already reflected in the profitability above the taxation as such. 1.32 crores to be precise in this quarter.
From the drilling services which we have, the profit margin goes slightly higher. So depending on the ground, depending on the client, depending on the mineral we are drilling in, profit can increase or decrease. And the Oman project, we should be expecting around 2030.
What is the planned CapEx, funding strategy, revenue sharing agreement, and production timeline for Phase 1 of the Jharkhand coal block? And what is its current project status?
As we have been saying that, in the first phase, we shall be requiring around approximately 200 crores to start the project. The current status of the project is that the exploration has been completed and we are in the process of, we are almost on the verge of finalizing the geological report, which shall be approved by the MOC. And then once that is done, we shall start working on the mining plan, which shall be subsequently approved by the MOC as well. So once the mining plan is approved, then the process for environmental and forest clearance, mining lease from the state government, and then it shall be obtained due course. So as far as the funding of the project is concerned, most of the money from the first phase shall be either funded through internal accruals, through the profits which we have been generating and which we shall be generating in future as well, through some debt from banks, and also through some off-take agreements from local domestic buyers. Yeah, as I said, it is going to be a mix of internal accrual, debt from the banks, which banks are willing to support us, and also through off-take agreements. So this 200 crores which we are talking about also includes some non-fund-based exposure. In this block, we have a revenue sharing agreement with the government, whereby we need to share 24.25% of the revenue with the government. We intend to start this block in financial year 28-29.
What is the revenue growth guidance for FY2027 and the current year? And can the company sustain its margins?
See, we should experience significant growth in seeing the Q1 numbers. We should experience significant growth in FY27. But our business is more cyclical, if you understand. So normally the second phase of the year is normally the productive time of the year. So generally we have seen in the past that the H2 numbers are much better than the H1 numbers. But since we have started off well this year, we expect the momentum to continue, and we should be able to achieve significant growth, what we have projected for the financial year 27 as well. So whatever we have told, we have achieved more, and hopefully this year also we'll try to do it. But as we have been saying that our business is quite dynamic and quite cyclical. So yeah, but we are well geared up to achieve a good growth, supported by the good order book and the clients which we have. So if all goes well, hopefully we'll be able to keep up the momentum.
What is the revenue contribution from the Hindustan Zinc and Reliance contracts? And what were the key reasons for securing the Hindustan Zinc contract?
For the last 2.5 years, so that is going on, and it is going to give us like the same quarterly results which has been going on for the last 1.5 years. Hindustan Zinc, we just kicked off 1.5 months back. So generally, because it's a long-term contract, so generally it takes time to gear up and reach the maximum operational efficiency. So maybe it would take around 3 months, and then onwards for the next 3.5-4 years, it will keep on giving us revenue consistently. As far as Reliance is concerned, there is one more thing, that there is provision for further extension of this contract there, and there is another extension which can be exercised by the client later on.
So we can't divulge these figures because but yeah, significant numbers come from these contracts which are large in numbers, because almost these two contracts almost cover about 60% of the total order book which we have. So you can say that 60% of the revenue are coming from these two contracts only. So we have been working for this group for last so many years now, and seeing our capability and seeing our on-ground execution, they've awarded this large contract to us, and it has already started in this quarter, and it should go on for next 4 years. Yeah, it should be on the same line, plus minus 5%.
What is the company's current net debt and debt-to-equity ratio, and what is the latest credit rating?
Credit rating, we have already announced it in the market. So CRISIL has increased our credit rating from BBB to BBB+. So recently we have announced that in the market. So that's a good news as far as the credit rating is concerned.
15 crores at the moment, with a very good debt equity of less than 0.39.
Currently our debt equity is quite low, it's 0.39. Right. The kind of profit we are expecting over the next 2-3 years, we shall be, and if we don't buy additional equipments, we don't incur any capex, we are getting towards being a debt-free company.
How does the company classify itself in the industry, specifically regarding being a mine developer and operator MDO?
MDO is a different thing altogether. MDO takes over the entire project, and they start allotting different work to different contractors. So we are not MDO right now. We are in fact the owner of the mines. So we shall be in a position to appoint an MDO in future if we desire to, subject to things in place. To answer your question, we are not MDO.
Is the company considering any M&A activities to improve scale in the drilling segment, especially given opportunities in coal drilling?
We have already been approached by 2 MDOs, and we have already started exploration for them. So these mines were allotted by the ministry to, the bigger players, and then they appointed MDOs, and now we are working with those MDOs for exploration activities in their areas, in the respective areas.
What is the broader outlook on coal block allocations and exploration activity in India over the next 3 to 4 years? And how does the company see the opportunity pipeline evolving?
We have already completed the exploration phase. We are working on the GR, and subsequently we shall be working on mining plan. सरकार अभी total I think around 200 coal blocks auction कर चुकी है, मेरे ख्याल से जो मेरी knowledge है, and अभी और भी tranches आएंगे coal block allocation. इसके अलावा जो सरकार का focus है वो about approximately 500 mining blocks, जिसमें rare earth, critical mineral, base metals पे भी सरकार का focus रहेगा आने वाले समय में. उसके भी काफी ट्रांचेस ऑक्शन हो चुके हैं और काफी अभी पाइपलाइन में है. तो काफी अच्छी विजिबिलिटी है एज फार एज एक्सप्लोरेशन सर्विसेज की बात है. जहां तक मिनरल, कोल और नॉन कोल की जो बात है, काफी अच्छा स्कोप है अभी आने वाले समय में, बिकॉज इट्स अ thrust area for the government of India right now, because this is the only way we can avoid dependence on imported imports, which is draining our precious foreign exchange. The production, the coal production has already touched 1 billion. In fact, it has crossed 1 billion. In last 2 to 3 years, we have almost increased our production by 200 million tons approximate. And by 2030, we are expecting almost a further growth of 30 to 40% coming from coal, only coal. Plus other minerals as well can also contribute to the growing demand. So I hope I have been able to answer your question.
What is the current status of discussions and projects related to underground coal gasification UCG? And when can investors expect meaningful contributions from UCG?
So basically, these blocks for underground coal gasification were recently allotted to 2 companies in India, and that was also done under Ministry of Coal, and so 4 blocks were awarded, but the tenders are being floated by the client, potential clients, and so obviously we are going to receive those tenders. We are in talks with them, we are in touch with them, so slowly and gradually you will see the exploration happening in India for underground coal gasification.
Can you provide updates on the CBM production orders mentioned in the investor presentation and the Oil India contract, including their execution status and expected revenue contribution?
This is from the past contract. Extension work has not started yet. It should be starting this quarter. It is from the same client, but it is not from the extension part. It is currently under execution right now. I think the last phase is under execution, so some part of it should come under revenue in this quarter also. We are also talking to clients if there can be some extension. If we don't receive any extension, there can be something coming from the Oil India also this month, this quarter.
What is the current progress on the aquifer mapping contracts or tenders?
We have completed almost 65% of the work. Balance 35% will be completed after the monsoon.
What is the competitive landscape in the domestic business, particularly in CBM? How are contracts acquired? Example, tender, negotiation, and what is the outlook for margin trajectory?
Obviously, it's a competitive market in some segment. In some segment, we are just 1 or 2 players. In some segment, we are the only player. So the competition or the competing companies depend on where we are participating, on what is the scope of work. In CBM, there are very few players in India right now who are providing CBM drilling services. We are one of them. It's more if it is coming from a private company, it is more to do with on-ground execution. If it is coming from a government company like ONGC, you need to technically qualify first and then be an L1 bidder. That's a good thing that most of our clients right now are private clients. And this figure should go up because government is also focusing on auctioning of oil and gas blocks, mineral blocks, coal, non-coal, everything. Like any other company, they invite quotation from different companies who are eligible. They do the internal calculation as to technically they can qualify to execute this work on ground or not. But they have one thing in the back of their mind, which is the company which can actually go to the ground and do it. The margin should be maintained because the entry barriers are quite high in this kind of a business. The cost of the capex cost is very high, and it is difficult for a new entrant to come and showcase their capability.
Are there any plans for promoter dilution or promoter-led equity issuance in the near future?
The promoters have currently acquired, recently they have converted some partly paid shares into fully paid shares.
Right.
Recently. So, abhi to as such, we are still thinking of it. It all depends. Future, it's a thing which we cannot answer right now.